I've been making consistently $5,000 monthly for the past 8 months, but the truth is I've not been using the conventional trading strategy, though sometimes I do. But I found a strategy that works for currency pairs, gold, volatility, and boom and crash. One thing I can promise you is that if you watch this video from the beginning to the end without skipping a part, this will change your trading journey forever. I've done a video similar to this trading strategy before, but I intentionally removed some details so that I'll be able to use the strategy longer before I release the full details to my viewers. This will include your entry point, your stop loss, your take profit, and also how you are going to set trading stop. Not just that, we also do a detailed live backtest to show you the trading strategy really works.
Promise you this video is going to be worth it, and I won't waste your time. I'll go straight to the point. So make sure you watch every minute, every second to the end. Now, to use this trading strategy, the first thing you need to make sure is that you set the time frame to 30 minutes, because I've backtested it across different time frames and I came to the conclusion that 30 minutes time frame is the best for this trading strategy. The next thing you have to do is to make sure you own the period separator. If you are using MetaTrader 5, just right click on your screen, go to properties, another properties, go to show. Under show, you will see this box in front of show period separator. Make sure this box is clicked, then click on OK. Now, but if you are using other platform like TradingView that doesn't have the period separator, this is what you will do. The meaning of the period separator, I'm talking about all these dots vertical line that you are seeing on your screen. The purpose of this period separator is to place a vertical line on the first 30-minute candle for the day. For example, this period separator you see here, and this candle is the first 30 minutes candle for the day. So anytime you see a period separator, it means the start of a new day, a start of a new period. So if you don't have period separator on whatever trading platform you are using, just put a vertical line on the first 30 minutes candle for the day, just like I did here. So let's use this as an example. Let's say we want to look for the first 30 minutes candlestick for the day, like this period separator. You place a vertical line on the first 30 minutes candlestick for the day. After that, you need to check the trend for the previous day. Was the trend for the previous day uptrend or downtrend? For example, you can see that for the previous day, the market was on an uptrend, which means for this new day, we are only looking for a buy position. Now, let me delete this vertical line because I already have the period separator on MetaTrader 5. Immediately, the first 30 minutes candle for the day close. The next thing you will do is to place an horizontal line on the close price for the first 30 minutes candle, which I did here. Let me zoom in so that we see it clearly. After you place an horizontal line on the close price for the first 30 minutes candle for the day, the next thing is for you to wait for a bullish candle to cross and close above the horizontal line. For example, here you can see that this bullish candle crossed above this horizontal line. It did not just cross above this horizontal line, it's also closed above the horizontal line. Then immediately the candle close, you place a buy trade, because you know that for the previous day it was bullish, so we are looking for a buy position. Immediately after placing the buy trade, your stop loss will be at the low price of this candle, and your take profits can be between 1:5 to 1:6. The next important thing about this trading strategy is your trailing stop. Though it is optional, but in many cases, maybe you want to take profits early, this trailing stop strategy is very important. For example, let's say, I said your stop loss will be at the low price of the candle that placed the buy trade. Now, after placing your stop loss here, if you want to activate the trailing stop strategy, you need the market to reach at least 1:3. Sometimes you can make it 1:1, but mostly I prefer to use 1:3. You need the market to move to at least like 1:3 in your favor. For example, let's say this is 1:3 in my favor. Immediately a bullish candle gets to your 1:3 and the bullish candle close. The next thing is for you to move your stop loss to the low price of the bullish candle, which means you activate the trailing stop. Let me delete the 1:3 ratio line. After that bullish candle, we got a bearish candle. After the bearish candle close, do not move your stop loss. Let it still remain the same. After the bearish candle, you can see we got another bullish candle. Then we also move your stop loss to the low price of the bullish candle, which means you are updating your trading stop. Then again, after that, we got another bullish candle. Immediately it closed, you move your stop loss to the low price of the bullish candle. So you only be moving your stop loss anytime you get a bullish candle. But unfortunately, the market turned around here, cut out the trade, then continue the uptrend and got to the take profit, the initial take profit, like the 1:6, blah blah blah. But this is very important to understand this trailing stop strategy, because it's very useful for you in many cases. Now let me look for another example. Maybe I can use that to explain again for you to understand better. For example, in this case, let's identify the first 30 minutes candle for the day, which is this. You can see the first 30 minutes candle for the day, which is on the previous separator. After that, identify the trend for the previous day. You can see that the trend for the previous day was up trend, which means for this new day here, we are only looking to place a buy position. Then the next thing is for, let me delete this vertical line, because I already have the previous separator. Place an horizontal line on the close price for the first 30 minutes candle. Then after that, you will wait for a candle to cross and close above this horizontal line. You can see here that we have a candle that crossed above the horizontal line, but the candle did not close above it. But you can see this bullish candle here, it crossed and closed above this horizontal line, and immediately the candle closed, you place a buy trade. Then your stop loss will be at the low price of that candle, and your take profit should be between 1:5 to 1:7. Let's say, for example, you place a trade here and the market went your way. Maybe it's reached TP, or maybe sometimes it's caught you out. You have the opportunity to enter the trade one more time for that day. Let's say you want to look for another buy position. This is what you will do. You have to wait for the market to come back again, cross below this horizontal line, and at least one candle should close below this horizontal line. Then again, wait for another candle to cross back the horizontal line and close above the horizontal line. For example, here you can see this bullish candle. Immediately this bullish candle cross back above this horizontal line, place a buy trade, and your stop loss will be at the low price of the candle, and your take profits will be between 1:6 to 1:7. Now, for example, let me explain the trading stop again. Let's say the market got to 1:3. Then you move your stop loss from the low price to the low price of the bullish candle that got to 1:3 in your favor. After that, you can see we have a bearish candle, you move the stop loss. Another bearish candle, you move the stop loss. Then we got a bullish candle again. Then you move your stop loss to the low price of the bullish candle. Then after that, we got a bearish candle, you will not move your stop loss. Then we got a bullish candle, move your stop loss of the bullish candle after the bullish candle close. The same thing for the next candle. Then you can see we got another bearish candle after that. You will not move your stop loss because this is a bearish candle. Then the market will come back here to cut us out on profits, which is good. So let's look for another example where I will look for a sell trade. This is an example here. We look for the first 30 minutes candle for that day. Place a vertical line on it if you don't have MetaTrader 5, right? Then the next thing you have to do is to check for the trend for the previous day. You can see that the trend for the previous day was down trend, right? Which means for this new day, we are only looking to place a sell position. After that, look for the close price of the first 30 minutes candle. Place an horizontal line on the close price for the first 30 minutes candle. After that, wait for a candle to cross and close below the horizontal line. You can see an example here. We got a bearish candle that crossed and closed below the horizontal line. We are going to place our sell trade, and the stop loss will be at the high price of the candle, and the take profit will be around here, 1:6 to 1:3. This is where our take profit will be. To activate the trailing stop method, the trailing stop strategy for a sell trade. For example, let's say the market got to like 1:3, let's say somewhere around here. Immediately the candle that got to 1:3 close, move the stop loss to the high price of the bearish candle. Then after that, you can see that we got a bullish candle. You will not move your trading stop until you get another bearish candle. Then you move your stop loss to the high price of the bearish candle. So anytime you get a bearish candle, you move your stop loss to the high price. For example, you can see that in this example here, the market reverse cut us out. But the trading stop strategy is optional. You can decide not to use it and you can decide to use it. Now let's do a short back test with MT5 strategy tester to see how this really works on a live account. So I've turned this strategy into a bot, so that is what we'll be using for this live back test. So if you want to get this trading bot for this trading strategy, click the link in the description. So now, for example, let's say we want to place trade. Now the first thing we need to do is to look for the first 30-minute candle for the day, which is where you can see on this period separator. Then look for the previous day. You can see that for the previous day the market was on a downtrend, which means today the current day will be placing a sell trade. Now immediately the first 30 minutes candlestick closed, we place an horizontal line on the close price for that 30 minutes. Then what will be the next thing we'll be doing? We'll be waiting for a bearish candle to cross and close below this line. So let's wait patiently and see what will happen after the closure. Immediately the 30 minutes candle closed below the horizontal line, we placed a sell trade. Then the stop loss was at the high price of the candle and our take profit was in 1:7. So let's continue the testing. Immediately the market got to 1:1. You can see that the stop loss moved from the high price down to the high price of the last bearish candle. So if we continue with the testing, you can see that with every bearish candle, the trailing stop will be moving the stop loss. You can see that when we got a bullish candle, the trailing stop did not move, the stop loss did not move to the high price. It will only move if we get a bearish candle. You can see that it is only moving if we get a bearish candle. So that's exactly how it will work. Can you see it got us out on profit? Now the trailing stop saved us, because if not for the trailing stop, in a scenario like this, the market would have reversed, cut us out on loss. But because of the trailing stop, we were saved. Now for a new day is about to start. This is the first 30 minutes candle. We wait for it to close. Once it closes, the stop an horizontal line will be placed on the high price. Then the previous day was an uptrend, so we are going for a buy for this day. So let's see what will happen today. Immediately we got a bullish candle, the stop loss move to the low price of the bullish candle. So anytime you get a bullish candle, the stop loss will always move. So that is exactly how this trading strategy works. So you can backtest it. Let me know your opinion in the comment section. Make sure you like this video, subscribe to this YouTube channel, and if you want to get the trading bot of this trading strategy, I will drop a link in the description to the website where you can get the bot. Thank you for watching from the beginning to the end. Bye guys.